This is True Multifamily, the show where we dive in on what really happens after closing a multifamily property. We're going to expose the role of asset manager. That's the person who has the responsibility of seeing the vision, executing the plan, and managing people, budgets, and timelines, all to deliver returns for our investors. These are the real struggles, the real victories, and the real stories of asset management.
Welcome back to another episode of True Multifamily. I'm your host, Justin Fraser. Today, my guest, Preston Walls. Preston, thanks for coming on the show, man.
Hey, Justin, thanks for having me. Excited to be here.
I'm excited to have you here. You were just showering me with compliments before the show. I love it. Thank you. I'm glad you're a listener, and I'm glad now you get to share your story with the audience. So I'm excited to have you here.
No, I love your preaching the gospel of real estate and the cash flow benefits it brings.
Yeah, absolutely. So Preston, let's tell our audience, tell us about yourself. Tell us about the properties that you invest in and how you got started.
Well, there's a lot there. I come from a real estate family background. My father was a real estate developer, and I swore I wasn't going to follow in his footsteps. But after a few years of working on Wall Street and getting burned out, it sounded a lot better. And so we started working together, and we spent 6 years working together, and we developed a building and did some renovation projects until he retired in 2008, and just been doing it since then. So I've been doing my own ground up new construction and renovations of existing multifamily buildings in Seattle.
Got it. And now you live in Seattle and you only invest in Seattle. Is that correct?
Correct. It's my only market. I'm a strong proponent of controlling as many variables as possible and focusing and going deep into particular verticals.
Yeah, no, that makes a lot of sense. I imagine then by being so limited, you are able to, everything about every property that's going to show up, right? Because you know those streets and you know the towns and you know every owner of every property. Is that a fair assessment?
I really like getting to the extreme nuance of things, right? There's some neighborhoods that are better than others, but there's some streets in some neighborhoods, and there's some sides of each street in that neighborhood that may trade at a 10 or 15% discount based on traffic patterns and shade, all these factors that go into making a place desirable.
Wow, that's so micro, but I love it because it's not something that we've ever spoken about on this show. We look at markets, we look at population growth, sort of these very macro trends, maybe honing in on, maybe a school district or things like that. But, what type of property, the traffic and the shade, I love it. That's so micro, but how that's so awesome that you're able to know that because you keep your area so focused. What would you say the downside of only focusing in one specific area is?
Ego, right? It's,
okay.
You spend your life wanting to get bigger and more expansive and broaden and go just further afield and travel more. It's cool to be able to hop on a plane to go visit the other region of your portfolio, and there's some scale benefits that can come from that, but it's not worked out for me, and I've not run up against a shortage of real estate opportunities within even the confined area of Seattle that I focus on.
Got it. Okay, so you're not even saying all of Seattle, just one section or one area of Seattle.
Correct.
Wow. Okay. Got it. Well, your target criteria, and we can all learn a lot from that. Absolutely. I would have thought that you would have some deal flow issues by just staying in one particular area. I would think that, if I'm casting my net wider geographically, I I might have better luck finding some properties. But you're saying not necessarily?
I have not had a deal flow problem, no, because when you get really entrenched in a market, the brokerage community knows you very well. There's a handful of brokers that are really active in multifamily in these neighborhoods, and they all know specifically what I'm looking for, and a number of them, will call me for pricing guidance or to just gauge my interest in it.
Got it.
So I'm usually a pretty strong go-to buyer for them for value add properties, multifamily properties that come to market.
Got it. And so what is the size or type of deal? How do you express your deal criteria to a broker?
Probably 2 to 10 million with a lot of hair on it.
Got it. Meaning
tired, low rents, unrenovated units, extra space in the building. I like storage and laundry spaces. I like rundown assets.
Got it. Yeah. I mean, that's what we do as well. That's where I think if you know how to operate, then you can make the most money. So great. I want to hear a little bit about your philosophy on home ownership. I know it's something you mentioned to me prior. So tell me a little bit about, your living situation and what's going on there.
Yeah, it's funny. It's a funny situation because, owning so much property in multifamily, I do not own a home, and I didn't buy a home until relatively later in life, and it was relatively short-lived. So I the majority of my life I've been a renter, and am a renter now because I view one, my housing needs or desires have changed quite a bit over time. Mm-hmm. They tend to change fairly frequently as your life cycle changes. You're single, you're partnered, you have kids. All of these create new demands for housing, but ultimately it comes down to financial, right? How your assets best used. And I view a down payment on a house as an opportunity cost for building that I could not be investing in.
Yeah.
And every multifamily investment opportunity I've seen has far exceeded the return potential that a single family house would have. So it's led me to invest the funds that I would have put towards the down payment.
I'm sure that's paid off very well for you, and that's great. I mean, I've started to hear this more and more. You mentioned ego earlier in the episode, and I think a lot of people probably have an ego tied to, this is my house, my home, and then I do investing separate. But for you to just, focus on the returns and focus on the opportunity cost of that down payment, I love the way you're thinking about it. So let's jump right into your True Multifamily story, because you started to tell me before the show about this very interesting project. And I know so you bought this 7 years ago. Let's take it from beginning, middle, and end. Set it up. Tell us about this property from 7 years ago. What was it? What were you thinking you were going to do with it, and bring us into it with you?
Yeah, this is I love this one because it incorporates so many different aspects of real estate and having multiple revenue streams or exit possibilities. This 2-building apartment complex. It was 5 units, so a duplex and a triplex, on a great piece of land with just incredible views of downtown Seattle and a lake and the mountains and Space Needle. And it was selling on a cap rate basis, but the land potential, the development potential was really significant for it. The problem with it, the broker couldn't market it as a land development play because a previous owner had tried to entitle it, and there was documentation from the city that said you cannot build here. It's on it's on too steep a slope, and the previous owner had not gone through, wasn't patient enough in the process to get it through. And so I viewed it as, this cash flowing building that had a zero cost option on doing something with it in the future. And it took me 3 or 4 years to get it through the city, just to say, yes, we'll allow you to apply for a building permit here. And now 7 years later, just wrapping up completion on a 61 unit building. So it's 60,000 gross square feet of Class A space, with just, incredible downtown views and skyline mountains.
So let's break that down a little bit. I love it. So you've got a killer location, right? Views and centrally located. You know the area well because you're only buying properties within your 20-minute range or so. And I love how you put this as a zero cost option, right? You know that, okay, if nothing happens here, it's a 5-unit and it's cash flowing, right? And so the previous owner, I guess, didn't factor in the fact that you might be able to develop in the price, right? If he tried and failed, he just moved on. Is that a fair assessment?
Yeah, I mean there was history on the property once you got into due diligence that said you can't build here. So it couldn't be marketed that way at all. The broker didn't even touch it.
Okay, so what in your mind made you think that you could?
At precedent, there's a number of other properties in similar areas that had been developed, and that I've got the patience to just deal with the brain damage to get it through, because it was not a simple process at all, and it took a lot of patience and perseverance to get it done.
You said, you mentioned the slope of the land. Was that the key issue for the city?
Yeah, there's 40 feet of elevation change between the back of the lot and the front of the lot. So this qualified it for a steep slope zone, which the city doesn't like to build on. That said, they have a number of exemptions and carve outs for this, and you can locate the building on specific portions of the lot that encroach a limited amount into the really critical areas. And that's what we did. And the architect was able to maximize the FAR, even given these lot constraints.
What is FAR?
Floor area ratio. So the zoning is a function of your land square footage multiplied by a floor area ratio. And that gives you the size of the box, the size of the building that you can put on the lot.
Okay. So you've got this opportunity, cash flowing property, maybe an opportunity to build on it. Because you know the town, your other properties in the area that have been developed like this. Do you, as you start to move through this process, are you working with a developer up front? This is not something I've experienced with. So can you just talk me through the process of, let's say I had a similar piece of land and I knew I was going to go through the work with the city. Who do I call first? What is that process like?
So how do you go through the due diligence on a property like this?
Yeah. I mean, do you just call a developer and say, hey, I have a piece of land, figure this out for me? You mentioned an architect already. Just what is the process like, to go from having a piece of land with 5 units on it to go through the reviews with the city and show them to make the case that they should be approving this?
The first call would be to an architect who specializes in projects like this. And any architect can give you a feasibility analysis pretty quickly And oftentimes they do it for free because they want the contract at the end of it. But the feasibility analysis will tell you what could be built here based on the zoning, and incorporating all the setbacks and restrictions that are in play, and then roughly how many units or square feet that correlates to, and then they'll give you some color on what's the likelihood and the time frame of working through this process.
Got it. Okay, so the architect gives you some of that guidance, and really just a first check on, is this even ever going to be possible or not? So you got the architect, they do the drawings. What happens next?
So the feasibility analysis gets you to an investment decision. All right, I've got to be comfortable with this. Once you move forward, then you could start the entitlement process, which is a fair amount of money to the architect to create the building plan drawings, and there's consultants that are involved, your engineers for structural, civil, all the different components that go into the building. But yeah, it's designing the building and putting in the time and the effort on the architectural front to get the project through the city reviews.
Got it. And so about how long for the city reviews to the point that you can say, okay, we're breaking ground? How long is that?
I don't know. It varies widely by jurisdiction. In Seattle,
how long did it take for you? How long did it take for you?
Well, I'd say in Seattle, it's probably 2 to 3 years for just a typical multifamily building permit. And this one, because of the slope, added another 3 years to get through the environmental process.
Wow. Okay. And where are you now? You said you were just finishing up this construction. What's the status of this property?
Yeah, it's in lease up. So we're temporary certificate of occupancy in 3 weeks. So we've got our
you're right
first move-ins April 15th. So we're just coming right down to the wire.
Wow. And how are your rents where you're leasing? How is this tracking against your pro forma back from all the way back years ago, where you said that you had that investment decision? I mean, how do you even get close to what you were thinking 3, 4, or 5 years ago?
Yeah, and that's a really tough one, and that's where a lot of the risk lies in development, because your costs are fixed and your revenue is variable, right? It's hard to project what rents are going to be that far in the future. What we ended up doing is keeping rents the same, or list rents the same as on the pro forma, and achieving the market through concessions, moving concessions. The market has declined quite dramatically in Seattle, like a lot of urban areas, over the past 6 or 7 months. So probably 2 months of free rent on a 12-month lease is fairly typical, and we've got 3 months on some longer leases, 16 or 17 month leases. Got it.
Okay, well, hey, you got your first move in April, so you're maybe a few months here from some cash coming in, and then finally, right?
Oh yes, finally. It's been a long slog, but it's so gratifying to create something and really have this tangible result of a lot of years of hard work.
Yeah. Let's talk about management. How are you planning to manage this? I know you have a management company. Talk about that a little bit.
Yeah, so this building's large enough that it'll have an on-site resident manager who handles leasing and is able to oversee the building. most of the portfolio is smaller buildings that don't justify having on-site resident management. So the staff, the management staff is centralized at an office, or it comes and goes out of an office, which is why I like to keep my geographic distribution of buildings close to that office. So it's cuts down on logistics and travel time to get out to the properties.
Got it. And so was there a point that you looked at third-party management, and why did you decide to build your own?
I never looked at third-party management. One, because my father had always self-managed, and so the structure was there. And then over time, growing into it, I came to appreciate the different ways that you use and press on your staff for different outcomes, right? There's just keep it filled and keep the cash flow coming. That's a pretty standard role. But anytime a lease up is involved, anytime a bank refinance is involved, you're after something different, and you want to see higher rents in place, even if it means taking some concessions, so you can show those leases to the bank to justify a higher value for refinance. And that it takes more nuance, and it takes more resources from the property management company. And so I wanted to be able to make sure that I had those resources available for whenever a project was maturing and coming into lease up.
Got it. Well, that makes a lot of sense. Man, love what you're doing. I love your story. I love how you're just so hyper focused on one market. You're able to find competitive advantages that, someone from out of state would never be able to find. So really impressed with you, everything that you shared with us today. Going to move towards the end of the episode here. Few questions. Number one is, how can people find out more about you?
Yeah, you bet. Our website is wallspropertygroup.com, and there's an investor newsletter. Sign up if you want to hear about the projects we're working on, and the investment opportunities that are coming up in future syndications. And feel free to reach out to me directly. My email is preston@wallspropertymanagement.com.
That's great. And if you missed any of that, Preston's information will be on our website at truemultifamily.show. Preston, I'm adding a new question. This is something that we're just starting to roll out. How can me or myself or our audience, how can we help you? What are you looking for right now?
Well, I'm always looking for new investors and new capital for projects. I tend to have more deals than I can put capital into, and so I'm always interested in new investors for
Great.
these value add projects.
All right, our final question. Somebody approaches you, hey, Preston, I want to get into multifamily. What is your true multifamily tip for them? You probably won't be surprised by this, given the rest of our conversation. You might not agree with it, though. The thing that has served me the best is I've been able to retain as much control over decision making and processes throughout the entire life cycle of owning a real estate asset. The challenges that I've had in partnerships have come through having multiple lines of decision making or lack of clarity in who was making decisions, and it's been extraordinarily streamlined and a lot of efficiencies in having a single point of decision making. Control. That's what we need, right? Especially if we're taking on other people's money, you want to be in control of that. And so I agree, actually, believe it or not. I don't, you and I approach properties and locations in a different way, but at the end of the day, we still want as much control as possible. Preston, thank you so much for coming on the show. Guys, if you like this episode, please leave us a rating and review. Interact with Preston on his website. All of his links up on our website, truemultifamily.show. Preston, thanks again for coming on the show. Really appreciate it.
Justin, thank you for having me, and thank you for getting out there and spreading the word.
Absolutely. Thanks.
Thanks for listening to another episode. Check out our website at truemultifamily.show. And if you have an amazing story to tell, share it on our Facebook community, and you might just be the next guest on the show. We're also on all other social networks. Just search True Multifamily. I'm really, really proud to have the show produced by our company, On Air Brands. Check us out at onairbrands.com. We also have an incredible, unique podcasting event that we would love for you to be a part of. Check that out at podmax.co.